Chip stocks, however, bucking the trend with names like Nvidia, Micron, and Intel all seeing some nice gains. Joining me now for what lies ahead for the tech trade this year is Baker Avenue's King Lip. It's really interesting here moves on a day that is otherwise fairly muted, at least when you look at the indexes, but some decent moves here for some of those names that we just went through. And Micron, my gosh, what a year that it put up in 2025. So as we look forward to 2026, what do you think it portends for the chip names in particular?
Hi, Courtney. We think 2026 is shaping up to be another banner year for tech. We're looking at earnings growth somewhere in the mid-20s, which is the highest of any sector in the S&P 500. When you combine those fundamentals with an accommodative Fed, historically you have a 70% win rate for the NASDAQ in January. So the tailwinds for big tech are simply, we think, too strong to ignore.
And when you call the Fed accommodative, how are you defining accommodative, assuming that there is at least one more rate cut?
That's right. We're assuming one or two more rate cuts in 2026. But we have a Fed now that's more focused on job growth than fighting inflation, we think. So as long as we don't get too hot inflation numbers, I think the current rate environment is very conducive to the tech sector.
Okay. And what about seasonality, whether it's the January effect or otherwise? How do you need to consider that if your portfolio is tilted toward tech?
From a seasonality perspective, January is typically a very strong month for tech. 70% of the time, the NASDAQ's up with an average of 2.3%. So the first quarter tends to be quite good for tech. So for those of us managers that are overweight tech, we're enjoying days like today.
What do recent acquisitions that have happened in the tech sector tell you about the health of the ability for sort of M&A to continue in this space?
There's been a lot of talk about valuations and concerns about valuations. We actually think the recent acquisitions are a big tell, for tech and how the giants are spending their money. We've seen deals from Google, from ServiceNow, Nvidia, SoftBank. Unlike the dot-com era, where a lot of these deals were done in stock. For example, AOL's acquisition of Time Warner for $180 billion in stock back in the dot-com bust, if you would. Today, a lot of these deals are being done in cash. So when you have these big tech companies spending cash for acquisitions, they aren't just buying growth. They're actually signaling that they believe their own stock may actually be undervalued. So we still think that's a massive vote of confidence in the sector's longevity.
And you point out Alphabet buying Intersect Power for $4.8 billion cash as an example. And Alphabet does look like it ends up on one of your top picks lists. Can you drill down on that name for us?
Sure thing. I think the company is proving that it's more than just a search box. A lot of doubters were concerned about how AI search was going to take over Google search. But I think the company has successfully weaved Gemini into this Google search. They've turned a potential threat into a massive growth engine, we believe. So when you layer in the historical seasonalities, Alphabet stock is usually up about 80% of the time, 80% win rate in January. And you have rising momentum of tailwinds like Waymo and YouTube. I think Alphabet enters 2026 with a diversified strength of many different tailwinds.
That is interesting. Do you think that YouTube is an appreciated asset in Alphabet when you're looking at the valuation?
Relative to the size of the company, Google's revenues is still pretty impactful. We're still seeing a lot of strength in conversion from cable into services like YouTube TV. So we still think that's a driving force for the company.